Hello, everyone. Hope you're doing most excellently. It is the 21st of September 2020. If you watched the review 2 weeks ago, you should be even more relaxed right now. Everything has gone to plan, and if you haven't, I will jot down another plan for you. So we'll start with the total market cap chart, and we have made a pretty good 10% bounce from our area of value, which is the quarterly level, which is this VWAP from the May lows. This is exactly where I told you to be managing risk, and I guess this is where we were last week on our way up to the bounce. And um, all I told you was, see, I'm not telling you guys to go all in, guys. I mean, if you're doing that, I'm not sure. I mean, if you're doing that, you probably won't survive too long. And I mean, if you have, it's just something that can't last for a very long time frame. But anyways, this is the zone. While price was here, this is the zone which I told you to manage risk. You do know how the mindset was. I did tell you that sharp drops create bearish mindsets. It's exactly what has happened. Very few people actually found this to be an area of value. I know so many who were looking for a bounce and then to go deeper. I, in fact, was also looking for a bounce and a higher time frame retest as well, but I already did manage my risk from here, and so did quite a few of you who did understand. I mean, it's just about managing risk. There is no absolutes. It was not absolutely certain, and it still is not absolutely certain in trading. It never is that this is where price would ultimately stall. But we had so much confluence. I mean, you watched the review 2 weeks ago. I drew out quite a bit of confluence on this level. So there was a lot of confluence. Everything was matching. Negative funding, negative sentiment. You're looking at higher time frames on this chart. It's really hard to not be bullish. We're building these W-shaped structures, breaking out of them and retesting them. We have pretty good momentum on any time frame close to the weekly. So I mean, there is so much that supports the fact that there can be plenty of demand. There is the macro factors we spoke about, the diminishing value of the dollar, the asymmetric property of Bitcoin, the interest that it is developing for institutions as well. I mean, those are plenty of reasons for something like this to happen. The kind of absorption that we have had in the beginning of September. So for now, we made a slow grind, and this is essentially mostly BTC. We'll get to what the alts are doing later, but we've had a slow grind out of the area of value. And just at the end of last week, we did begin another sell-off, but I mean, essentially it is not a very strong sell-off. It is not being absolutely and completely supported by the bears, because I think what was happening was the bears, they got pretty decimated on this slow rise. There was a lot of selling over here. I did tell you again and again. The thing is, I mean, a lot of people ask me, oh, how do you do it? I work hard, guys. That's how I do it. I spend a lot of hours. I spend hours watching the tape. I spend hours actually looking at what the big money is doing, of course. And I'm finding confluence with multiple factors. I'm finding confluence with technical analysis. Yes, I do show you a lot. There is probably a lot that I do which you may not understand as of now. So there is technical analysis, there is sentiment involved, there is on-chain analysis involved, there is funding involved, there is dumb money involved, there is institutional money involved, there's fundamental aspects involved. So if you want to be a full-time trader, you have to put the hours in, you have to know where your edge lies, and you have to know ways to extract that from the market, so that you can utilize it again and again and again. So this is what it was, this is what that analysis presented to me. It presented to me an area of value. Even while we were up here, I did mention it that this is the area of value. It was because of the having multiple confluence, and for now we have moved away from it. We are slightly more than 10% away from the area of value. And what I would say is, I see a lot of the market is slightly starting to get bored, because volatility has dropped significantly. But I think this is the time to pay attention. If this was to be a sideways month, it is pretty close to coming to an end. For me, in terms of what my calculations and basis on time projection were telling me, is that potentially price could move out of here within the next 10 to 14 days. Price would move out of here, and we would then be reconsolidating at higher levels. So you can already see, if this was consolidation, if it was a bearish kind of consolidation, we would potentially have already gotten that high time frame retest. But each time the bears are trying to get a bit aggressive, now price is not being allowed to drop at all. It's essentially even the lower leverage shorts that are trapped here, they're going to be in big trouble. Already most of them would have closed, but if there are some stubborn bears over here, then I think they should be in a bit of a problem. They should be in a bit of a rut over here. If there's a bunch of bears over here, as soon as price is going to flip these anchored VWAPs into support and have another move up, I guess most of this crowd would get liquidated. So giving them another opportunity, essentially, I think that is what the market is avoiding. And also it is again the premium that any late bulls will have to pay, because an area of value psychologically is also quite complicated. It is not something, I did speak about it quite clearly in the Discord as well. It's just the shape of this drop just psychologically damages people. And essentially it's also because people are not able to shift mindsets. You're taking profit, market climate is changing, you can't have the same risk profile you had while the market was trending. You have to be fluid in the way you manage your risk, in how much you are able to, and in how much you are wanting to bet your money and your capital. So this is you want asymmetric returns. That is why you are here in cryptocurrency trading, and you are actively spending time in the markets. So you want asymmetric returns, then you have to be unique in more than a few things. And one of the most important things, and I would say possibly the two most important things, they might even be more important than the technical analysis itself, is the mindset, the mentality, and the other thing is the execution. So it was as simple as that. So say we were talking about this being the area of value. So how you would have executed your trades would depend on how comfortable you are and how comfortably you're sitting right now. So I mentioned in the Discord, sub 9900 BTC, I'm very interested if price does get here. So those trades got executed for me. I had a stop which considering how markets are, was made risk free on the first bounce. But all I had to do since then was to be able to manage risk and find more places to compound. And for now, my strategy is still that I'm still finding places to compound alongside bets. And considering what altcoins had done, I mean, there is two perspectives to that, and we will get to it once we look at the altcoin market cap and the alt BTC pairs. But for now, this is as it stands. For me, the probability of even a price revisiting these lows has become quite low. You know, there is this a significant level, the 312. It's actually a 4 hour level, but you can see how significant it became. We lost it, turned it into resistance, flipped it into support. Since then, we have not gotten back. So if there is areas of value, I will also speak about them for BTC. But for now, what I can see on the total market cap chart is that there is demand. There was just a lot of supply trying to break, held up very well, complete absorption. First bounce, the second bounce, this was the last attack, what I would say, from the bears, which was very weak and quite unsuccessful. And since then, it is just reflecting how this is just another aggressive consolidation. Front run after front run. That's essentially what has manifested for price to be looking the way that it is. And why that it is happening is essentially, I don't need to keep explaining it. Just go watch the macro review. There is more than a few people who understand that. So if your time frames are too short, or if you're having a lot of trouble trading these kind of structures, you just really need to zoom out. For a swing trade, that could take the total market cap to even 4 times from here. Essentially we could cross $1 trillion in the total market cap. To be able to manage your risk, essentially 2%, a 2%. So the risk to reward ratio is very, very skewed. And what I would say is, if we're looking at that kind of a swing trade, and now you have a confirmation of even higher term market structure, like let's look at the market structure on the daily. So on the daily, this is essentially the high that made the low. And what we've done is we already made a higher high right here. We've made a higher low, and we've made another higher high. We've made another higher low since then. Just on the daily time frame. So you have a break in market structure, a low time frame on the 4 hour. If you were on the Discord, I alerted you when we had a break in market structure. It was very early, on the 8th of September or the 9th of September, what I would say, while price was here. There's excellent opportunities to be looking for upside. So for now, what I would say is that you are late. If you were not able to shift your bias and flip your mindset, so you should still be prepared to pay that premium, for the next move up, and find the next place to manage risk. And essentially, for now, it was potentially be this weekly level on the total market cap. Let me just drop an anchored VWAP and see how price is supporting it. So from the lows, you can see how price has supported it. So what I would say is the next zone, which is here to manage risk, it is right here. This is the zone to be managing risk. So this is the premium you would have to pay, which is essentially about 10%, and this is where I would be managing risk for compounding further longs. On this, the time frame I have shared with you is over the next couple of weeks. And I would expect that, considering everything that's going on over here, we'll also look at the dollar soon. I would expect that we are gearing up for the next move. So the altcoin market cap, we're looking at the weekly time frame first, and we've had that first bounce. The second, we're just making a sideways week, consolidating below the quarterly level. Let's look at the 4-hour. So 4-hour again, very clean, very nice levels to be managing risk. If you weren't able to do this, I don't know what else to say. We did get a good bounce out of the altcoin market cap, but you can see, compared to the total market cap, how price is moving differently, and that is signifying that alt BTC is taking a bit of a hit, because you saw total market cap was a slow grind up. Altcoin market cap had an impulse at the beginning of the month, right after the review from 2 weeks ago, but since then we have essentially just been going sideways. And if you haven't been around in the Discord, I'm not so active, and it is essentially because of this market conditions. There are times in the market where the market gives you time to relax, time to do other things, time to be with nature or whatever else it is that you enjoy, because trading and making money, it's not just about sitting in front of the screen 24/7. It is about being able to make the most of volatile conditions and knowing when to preserve your capital and waiting for great setups. This was a great setup over here. This is just pure chop. What I would say is, if you're looking at a lower time frame level over here, this is a really nice 4-hour level. I like this 4-hour, and essentially for now price is just defending it. You can see support, flipped into resistance, flipped back into support. Such clean. If you just had one line on this chart and this was that line, you would still find places to manage risk. And if you are here all the time and you're playing these, just look at that. That's 7% move, such tight risk. Another 6% move, such tight risk. So you have a great place to manage risk in this level. I would say if this level is losing itself, we have a very significant channel right below it with another confluence of a place to manage risk. But considering what alt BTC is doing, which we will just get to, I would say been focusing on a couple of majors that are still showing strength, which is mostly Ethereum. It could be a bit of a trap to be in altcoins right now, and I did mention it. I mentioned it 2 weeks ago as well, that is something that would potentially be a possibility, that altcoins make that 50 to 60% correction, and basically a lot of people FOMO into alts. And what would happen beyond that is that people would still FOMO and miss out the moves on BTC, because alt BTC could take a hit. So it is potentially possible. At least the last 10 days or so are showing that there is potential for that to happen. So for now, on the altcoin market caps, a couple of places to manage risk, but I would say, considering what is happening with alt BTC, this is something you need to be very careful about and manage your exposure, and essentially minimize it. That's what I would say, considering what relative strength is showing us. So BTC as well, same thing. This is the weekly block that we were managing risk from. Made a pretty good move last week, and we have closed the weekly above this key quarterly level. So I would say that is very significant, and what I would say is that it may um, exclude the potential of breaking back below. Let's go to the daily. So on the daily, I mean, essentially this is a zone. This is a very nice zone to manage risk that I did give last week on BTC. We did get 3 trades off of it. Third one, which has moved very nicely away. This was a place to compound. So the Discord, if you were around, this is what my plan was, to buy sub 9900 BTC. Took some off on risk, compounded the long over here, and I'm currently finding no reason to take off that long or even to be taking profit, because what I can see is just bears getting in trouble over here. So for now, what we see yesterday is we've had a bearish engulfing candle. It's not exactly on strong volume, and we are not getting follow through as of now. What we've done is we've reclaimed the quarterly level. Outside of that, what I would say is that there is a huge volume gap over here. So if actually price was to start closing below this VWAP, which is in confluence with this quarterly level, if we start getting 4-hour closes below this, then I would say it is potentially possible for price to come back down to 10,370 and be a great place to manage risk again. And from 10,300 to, I would say, about 10,200. Like, this would be a great zone to be managing risk. But what I think is that since so many people missed out over here, and essentially what I would think is that we are going to move up from here. So if there is a potential probability of not getting that retest and of getting absorption right here, keeping these shorts trapped and just liquidating them on the next rise up. So what that would mean is that you would need to find a higher area to manage risk. So the higher zone over here, essentially, let's see. So we've had this entire move. For BTC. This is the first one, and here is the second one. So yeah, I mean, essentially this would still be the zone to manage risk, guys, for BTC. This quarterly level in confluence with this VWAP right here would still be the zone to manage risk. I mean, we do have a potential of possibly wicking, to take out some lows, but it is still quite probable that we would continue to get that absorption in this newer zone and then move up. If we do start making mid time frame closes, then a trip down to this daily level. 1 second. Yeah. Yeah. So a trip down to this daily level would then give another great zone to be managing risk. But for now, I think considering what is happening, we have to see today is Monday, US Open today, and essentially what the dollar does today is significant. But if this zone continues to hold, just remember that it is potentially what may be setting up the liquidation for all the bears that haven't figured it out yet, and they're still betting for further downside, because this giving a free lunch after doing what price did over here, it seems a bit tough, for now. So new zone to manage risk for BTC. For me, potentially, I would want to compound another long over here after this, essentially, which I would cut pretty quick if we start to show weakness at this level. Outside of that, yeah, I mean, for now, another thing is that we're getting support resistance flip. You can see support, 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 break down, and now we are resistance, resistance. So if you really don't want to, I mean, you want even a higher time frame confirmation, then I guess you would have to wait for price to break above and find support above 11,100, and then manage risk from there on. But if you're still looking over here for lower levels to manage risk, essentially this would be the zone. So here we're looking at altcoin dominance, or basically alts against BTC. And what I want to show you here is essentially the period of time when altcoins really do dominate BTC, or what we call alt season, and the periodic nature of it. So what we have is 96 days in 2013, 2014, 136 days, that's about 4.5 months in 2014, 2015, 2015, 2016. It's 68 days, a little more than 2 months. 2017, 2018, the mega out season, again it's about 116 days, which is 3.5 months. Alright, so this is the period of dominance that altcoins have had over the last 4 times that they have made significant moves against BTC. You can see that the maximum has been 4.5 months, the minimum has been slightly more than 2 months, but on an average I would say it is somewhere close to 3 months, or close to 90 to about between 90 and 100 days. So you can see that from the May BTC spike, which was post halving, we have had about 104 days till the August top on this altcoin dominance. So that is 104 days, that is the average period where alts dominate against Bitcoin. So considering that, I would say that you need to be careful of whatever kind of exposure you have on altcoins. It is not looking exactly like that, it's not looking as dangerous as it could be, because we've had some late movers on large caps like TRX and BNB, so those have kind of shifted the way this is looking for the altcoin dominance and essentially also against Bitcoin. But if you look at any of the mid caps and the small caps, you will know that they already have had a sell-off like this, a significant sell-off, and are potentially consolidating again. And it is probable that it could be another distribution where Bitcoin makes a move up, and alts have another 2 to 3 months of downside. So this is something to keep an eye on. But also we have a very significant angle where what BTC is trying to flip, so it's pretty tight here. I would say as soon as there is a sell-off, even technically, no matter how a couple of those large caps skewed this chart, technically this chart would just say short this, which would, if we do end up breaking this support, because then this would just be a fake out. And considering this rise has not had any structure yet, price won't need to come back and fill up this empty space before making the next move. So for altcoins and for their cyclical nature, this is something for us to keep in mind, that we have had that average period of altcoin dominance, that we've had since the last 6 to 7 years. You can see basically since the 2017-2018 BTC top, altcoins have really struggled against BTC. 2019 we had just some small bounces. 2020 beginning we had BCH and BSV, which were largely responsible for this move. So this was a significant move, but still, if you look at it in terms of timing, I think it was pretty short. It's just a month of a quick spike, so it's not something that was significant. But we've had these 100 days, um, which have created all BTC tops for most mid caps and small caps, which are down a good 60-70% already since their tops from August. So I would say that that is something significant. If you do still look at very long term and you need and want to keep some long term exposure, you can do that, but just remember the opportunity cost. And another thing with altcoins is that each time BTC has been moving, Ethereum has been proving itself to somewhat be a bit separate from the pack. Essentially, it has part of the DeFi narrative attached to why it may be one of the majors that is shifting its movements more in correlation with BTC and separating itself from the rest of the altcoins. So this is something that is possible. So apart from BTC, it is something that I am doing. I want also to have some Ethereum exposure, but for other altcoins, I think it is time to be pretty cautious and manage your exposure, because you don't want that Bitcoin makes another 20-30% move up from here and your alt BTCs are getting absolutely smashed and you end up losing opportunity cost. Because this is the thing with alts, guys, when they really do move, they give you spectacular gains, and after that it skews the mindset and creates a lot of people who are hodlers, dreamers, just in greed and stuck in their emotions, imagining and dreaming for more and more and more. And those are the people who end up missing out. Cryptocurrencies have a lot of complex relationships, and correlation is something that is absolutely instrumental in getting a higher than market returns. So just keep an eye out for this, guys. You want to keep some exposure in a few coins which you think are still showing some strength, while BTC ends up showing strength. Outside of that, the cyclical nature is telling us it is potentially possible that a lot of the mid caps and smaller caps have had their first sell off and may chop and grind for quite some time to come. So for the traditional markets, the market as we see it isn't doing anything which is out of the ordinary or anything that is unusual. The election year generally is different from the other years, and we do have pre-election year which outperforms. If you've been watching our reviews, we have shown plenty of statistics that show that, and the election year also has a slightly different fourth quarter which is preceding the elections, which is what we are in. And this election year, what we have is the yearly seasonal pattern, and what you can see is very clearly we have 3 sitting president running all election years and the open field. So when you see the sitting president running, we have slightly bullish September, mid-September start to get a bit of a sell-off into a flat October and November. After post-election, we start to get another run-up. So what we've had is basically this sell-off kind of getting front-run, So we've got somewhat of a pattern of the open field where we've had that sell-off in September, the early September. And now we're getting what possibly could be another sideways, and there is still potential of another sell-off. So you can see that October and beginning of October has always kind of been slightly bearish for this pre-election year statistics. So what we have to do is keep this in mind when we are thinking of risk on assets. But basically, if we do kind of stabilize and this thing is getting front run, and we're getting the early sell off in September, and we might end up getting a flat October, then we can be looking for upside on the strongest sectors. The strongest sectors being industrials and materials, or more recently biotech. Value is outperforming growth after possibly 2 decades. So this is a theme that is evident going forward. But outside of that, of course, the gold miners, the silver miners, they have been completely outperforming the market over the last couple of months. So it is possible that commodities and metals, and possibly rare assets like Bitcoin may outperform over the next month or so, considering we have this fundamental factor which is here in place. So this is something to keep in mind, and this seasonality is also very evident, and it has held us in good stead, because end of August we had started to look to take profits in all risk on asset classes, including cryptocurrencies, and currently we are still cautious, and including traditional markets, we should be looking for that caution. But if we do have to play upside, then do so in the leaders. So in commodities, apart from the metals, the gold and silver charts we've been discussing, you do know we played some great moves on lumber, on rice, and of course on oil as well. So what I have now is the wheat futures, and what we should be looking at is essentially since the 2016 bottom, we have a very interesting perspective of this zone for wheat. So you can see that we've had wicks, but slightly stronger. This is a pretty high candle close in March, and we had the sell off. So what I would say is you keep a lookout on this, because we have still about 10 days to go, but this looks like it's gaining strength right here. So what I would say is that once we can break above 6,000, there's some significant moves to be had on wheat as well. So it's been pretty crowded, but wick higher candle close, wick even higher candle close. Now the candle is trying to close, so this is signifying demand and strength. So this could manifest another strong move once we do move up out of here above 6,000. So something to keep in mind and something to keep a lookout for. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!